How trustworthy are the bankers when actually they're just an ordinary company trying to make money for themselves out of us? So let's go now to the film The Big Short.
In the late 70s, banking wasn't a job you went into to make large sums of money. It was a snooze.
How about those Mets?
Filled with losers, like selling insurance or accounting. And if banking was boring, then the bond department at the bank was straight up comatose. We all know about bonds. You give them to your snot-nosed kid when he turns 15. Maybe when he's 30, he makes $100. Boring. That is until Louis Ranieri came on the scene at Salomon Brothers. You might not know who he is, but he changed your life more than Michael Jordan, the iPod, and YouTube put together.
All right, gentlemen, let's get some money in here. Let's make some money. What do you say?
You see, Louis didn't know it yet, but he'd already changed banking forever with one simple idea.
The mortgage-backed security, or private label MBS. You've got your average person's mortgage, fixed rate, 30 years, boring, safe, small payoff, right? But when you have thousands of them all bundled together, suddenly the yield goes up, but the risk is still small because, well, they're mortgages. And who the hell doesn't pay their mortgage?
What exactly is the credit rating on this bond?
This bond, gentlemen, is AAA rated.
This is exactly what the Michigan State Pension Fund has been looking for. I'll buy $20 million.
Oh, come on, live a little.
$25 million.
The money came raining down. And for the first time, the banker went from the country club to the strip club. Pretty soon, stocks and savings were almost inconsequential. They were doing 50, 100, 200 billion in mortgage bonds and dozens of other securities a year. And America barely noticed as its number one industry became boring old banking. And then one day, almost 30 years later in 2008, it all came crashing down.
Bear Stearns was in a death spiral, and the Fed brokered its sale.
The worst financial crisis in modern times. Certainly the largest financial disaster in decades in this country, and perhaps the end of an era in American business.
In the end, Louis Ranieri's mortgage-backed security mutated into a monstrosity that collapsed the whole world economy. And none of the experts or leaders or talking heads had a clue it was coming. I'm guessing most of you still don't really know what happened. Yeah, you got a soundbite you repeat so you don't sound dumb, but come on.
Our financial institutions are strong.
But there were some who saw it coming. While the whole world was having a big old party, a few outsiders and weirdos saw what no one else could. These outsiders saw the giant lie at the heart of the economy, and they saw it by doing something the rest of the suckers never thought to do. They looked.
There's going to be a bailout.
Well, they had to. Right? Paper markets would
They knew.
Cash would stop coming out of ATMs. They had to backstop this.
They knew the taxpayers would bail them out. They weren't being stupid. They just didn't care.
Yeah, because they're crooks.
Banks took the money the American people gave them and they used it to pay themselves huge bonuses and lobby the Congress to kill big reform. And then they blamed immigrants and poor people. And this time, even teachers.
And that was a clip from The Big Short, a film out the tail end of 2015, courtesy of Paramount Pictures. The film stars Christian Bale and Ryan Gosling and others, and it's about the 2008 crash. And it's quite an entertaining look at the kind of hypocrisy in the financial system and wishful thinking and groupthink that allowed it all to happen in the first place. And a reminder as well that it wasn't a crash, it was a bailout, because the bailout was there to avoid the crash. Another point, really important, is that the people that the bailout helped are two. One is the people with deposits above about £75,000 in banks in the United States and Britain, because those deposits are guaranteed by the government. Anyone with higher amounts than that would lose them if the bank collapsed. And the other people who would lose out if the banks did collapse are the bank shareholders. So these were very specific shareholders who were guaranteed that their company wasn't going to collapse by the government, unlike things like British Steel, etc., which have just been allowed to tank, and everyone who had shares in them had lost a lot of their money. So very special consideration given to the banks. And as was pointed out in that clip, the massive amount of bailout money went into lobbying Congress and lobbying Washington to make sure that there was no real changes to the system to stop it happening all over again. And also, of course, massive multi-million pound and dollar bonuses for the bankers that caused this crash in the first place through a lot of the false accounting that was going on. A lot of echoes of Enron. Something else I'd mention is that there's a brief mention of Salomon Brothers there, which was supposedly starting this idea of getting mortgages involved and using them as kind of collateral, even though the mortgages were at the time pretty safe. Of course, as the financial situation got worse in the US and in Britain, of course, those mortgage-backed securities, MBS, became more and more fragile every week. And the Salomon Brothers is a company which also had a large building as part of the World Trade Center in New York, which was under attack. Of course, on the September the 11th attacks, the Salomon Brothers building is also known as World Trade Center Building Number 7, which conveniently collapsed, even though no plane hit it. So I wonder if that's part of this massive scam as well. Anyone that's not seen or heard about World Trade Center Building 7, do look it up. There's a lot of stuff on there, particularly on the very good website, Architects and Engineers for 9/11 Truth. So Bear Stearns, Lehman Brothers, does all look a little bit like Enron, doesn't it? Of course, Enron was well before all this in 2008, but it was almost like a warning shot across the bows that everybody should see just how corrupt and crooked the Wall Street and City of London financial centre banksters had become. The film again, The Big Short. It's called, starring Christian Bale and Ryan Gosling, available at cinemas, on DVD, and, if you're lucky, maybe on YouTube somewhere.
You're listening to dialectradio.co.uk, your local community radio run by volunteers. Log on to our website at dialectradio.co.uk to find out more.
Well, last week we spoke to somebody from the Bristol chapter of Positive Money. One of the things he said is that they did a survey of our MPs, and you would hope that the MPs had some kind of grasp and understanding of the money system, but their survey found they didn't at all. Only a handful of them. A tiny percentage of MPs actually understand how money works, which is rather worrying since they're supposed to be looking after the entire economy for us. And I got hold of a book from the Odyssey Library. It's called The Story of Money. It's a small little handy little hardback written and illustrated by Ned Seidler. That's Seidler, Ned Seidler, and it's published in 1965. And there's quite a lot of interesting facts in it about money, all I think which we could probably do with our schools right from children of 11 years old or so, getting a proper education in money and how it all works. And for example, here's some facts from that book, The Story of Money, that if money is not backed, they say, by precious metals, history tells us that it's worthless. Well, of course, our money today is mostly paper money. The metals that our coins are made from are not precious metals, they're base metals, so it's debased currency. So when you're trading, traditionally, a coin, a silver coin, etc., would actually be worth the face value of the coin. So the Spanish became very successful with their doubloons and their pieces of 8 because they were guaranteed made of silver and other precious metals. They began circulating around the whole world as good valid currency, and it meant a great deal of domination by the Spanish of the international financial system. But of course, bit by bit, those coins have been undermined. Something quite famously called the Henry VIII copper nose coins. They all call him Old Copper Nose because Henry VIII debased the coinage here in Britain from silver down to copper, and he would give the copper coins a silver plating, and then people, as they used the coins, would rub off the silver plating from Henry VIII's nose on the coin, which was slightly raised. So he was called Old Copper Nose. Another thing is we've got goldsmiths and money changers, who were the originators of bankers before banking was ever considered a sort of profession in its own right. Also important to see how the Rothschilds have operated over the centuries as key movers and shakers in the financial services industry, really from 300 years or so on. And the Rothschild family were based in Frankfurt in Germany, in the ghetto there, and ended up over a period of just a very short time, after getting a good relationship going with one of the royals in that area, brother running each banks in London, Paris, Vienna, Naples, as well as the home bank in Frankfurt. And of course they're extremely powerful to this day, get very much involved in politics with Victor Rothschild, people may know, being very much a mover and shaker under the Thatcher government to do with privatisation, etc. And of course still others today, like Jacob Rothschild, Nathaniel Rothschild, who's a Bullingdon Club colleague, friend, pal, chum of David Cameron, Boris Johnson, and many of the senior people in the Conservative Party. Also, the ancient Egyptians had no money. Did you know that? They had a system of credit and bookkeeping, rather like compared by Ned Seidler to modern credit card systems. So it's almost as if we're going back to the original Egyptian money system, where people are not actually given money, they just have credit assigned to their name by somebody who, of course, may just decide to switch your credit off or on, or it be fraudulent. So the idea is to really keep anything precious out of our own hands and entrust it to the bankers, of course, who are not necessarily trustworthy. There's a quote also from Somerset Maugham, who said, "Money is like a sixth sense, without which you cannot make use of the other five." Worth bearing in mind too that throughout medieval times, charging interest, known as usury, in Britain and all over Europe was illegal. So you weren't allowed to make money out of having money, which is become a massive fake kind of industry, even though it's not really an industry. It's just a kind of bookkeeping process, paper pushing process. It would have been illegal all those years ago because they recognised that money would be funneled into a tiny number of hands and the whole country would become destitute. So they decided not to allow it. We're living at the moment in a housing bubble, property bubble, and a asset bubble. So that's house prices, share prices are artificially highly inflated. And the book looks at something called the Mississippi bubble back in 1716. It's also known as the Louisiana bubble because obviously the Mississippi is in Louisiana. And this Scotsman, John Law, was living in France, and he became very friendly with the Duke of Orleans in France and managed to convince thousands of wealthy investors right across France to invest in the Mississippi and in Louisiana because of the gold deposits and silver deposits. And he said there were all these mines over there. And because he had the support of the Duke of Orleans and other senior noblemen, if you can call them that, or gentry in France, he created a kind of wave, almost like a kind of Ponzi pyramid selling scheme for his projects to develop these gold and silver mines in the Mississippi area. And it was all completely fake, and then the whole thing collapsed. So that was a bubble that was pumped up in 1716 and then went bang as everyone lost their money. And then John Law, surprise, surprise, fled France. Also stock exchanges, we get used to those all over the world today, but there was in 1531 there was really only one major stock exchange in the whole of Europe, and that was the Antwerp Bourse. The word bourse was sort of predated the idea of stock exchanges, but it's pretty much the same thing. And another thing that Ned Seidler finally points out in his book is that throughout the centuries, paper money has always been associated with manipulation and fraud. So get the paper money in your wallet out, see what it says on it, and if it says that you can exchange it for a pound of gold or anything like that, I would do it if I was you, because as Ned Seidler says, it's always associated paper money that isn't backed by gold with manipulation. And that book is called The Story of Money by Ned Seidler, written and illustrated by him. and it's part of the Odyssey Library, published way back in 1965. It's published by Paul Hamlin Limited.
You're listening to dialectradio.co.uk.